Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Wednesday, the 29th of March, 2017. We're after 2 p.m. Central Standard Time. All right, my friends. What the markets are now doing is they're getting ready for Friday's USDA report, where we're going to get a good idea about America, what we look like in plantings and blah, 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 and what's going to go on in South America. And the products, if you take a look, we had a bit of a rally in the wheat, the corn today, in the meal. Beans stayed lower. Now, the beans are interesting because they were going into the first quarter of the year. Markets that we had heard a lot about the market being $10 and higher, offering a lot of profit to the farmers. Well, now the market's down to $9.69, $9.67. A lot of that profit is gone, and at the same time, you haven't really rallied in much of the other grains. When we take a look, and you can see what I'm getting at here, this is 2017, and on the weekly chart, you got as high as 1080. You've dropped away a full $1 a bushel on that. That is what I'm talking about, is that hedging pressure came in, and it didn't just come in this month. It peaked out in the middle of January, and it's worked its way lower as the math of what the other products were doing was weighing on the market. Now, as we take a look on a closing-only basis, on a daily basis, you've gone now from 1052 and a quarter to a new close low today of 969. So we've seen that even on the closing basis, because, you know, when you get daily ranges, you can get extremes. But on a close, it's not quite as extreme. And that's a heck of a break that we're seeing in the market, about 85 cents or so. As we take a look at the daily bar chart, it just keeps leaking away, and that is the problem that the farmers are having. What choices do they have? They don't want to plant the bean. Where are they going? To a low-price corn? That's going to be their dilemma. And as we take a look at the chart, really this arrow was from yesterday, and it should now point down. Why? You've now got the pattern of lower highs because the low today at 967 and a quarter took out the previous low of 968 and a quarter. That would mean until you get over 976 and a half, the pattern is now one and stays one of lower highs, lower lows, which is bearish. And I've put that here so you can see the difference as to how they look. That was yesterday. This is just why it looked that way. And now today, with the drop, you come over here and you see that crystal clear. You're also well under the 18-day average of closes. From the time you had the bearish crossover where the 18 got under the 100, this market has just been vicious to the downside. And that all happened this month, but the peak was made way back here in January, just showing you how that all accelerated. Will the market make it down to 963, the lower Bollinger Band? It might, but remember, it's hit it on a series of times here. It doesn't mean anything to me if it does or doesn't. As we get into that report, you're liable to see some evening up. Plus, on Friday's the last trading day of a quarter. So on this type of break, it's not uncommon to get evening all the way through there as traders cash in. They don't want open profits necessarily, want to get paid for what they made. There's many events that take place. As we look at the slow stochastic reading, it is still fully embedded, leaning this market just into the bear camp until that is lost. When we come to the meal market, fully embedded reading. Now, we had what's called an outside day today. That means we took out Tuesday's low and high and closed higher on the day. Should you take out that low in the next 2 days, this would be a trap for those that are trying to pick a bottom and drive the markets maybe even a lot lower than that. Have to wait and see. But what I'm expecting is, as I said before, you had a bearish crossover the other day right through here. Watch, it's going to get under right now. This was the day on Monday, and you look at what it's done basically since then. It's worked its way gradually lower, which is the idea behind that. Now for a change today, soybean oil is losing to meal. I don't know if that's any more than this quarter evening up and what's going on for the reports and so on, but I will say that now you've got lower highs, lower low. The market is pointing down in momentum, but oversold. Look at the reading. It's under 30. I consider that oversold. In the corn market, if we go back into January, you can see it did not peak out then. This market peaked out in February, right here in the double top area over 385, and since then it's worked about 30 cents lower. So it's gone a third of the distance than the soybeans have, but still to the downside, not giving farmers a real good choice here. Momentum is picked up to the point where tonight, if this market were to open steady to higher, you probably lose the embedded reading, something to be careful about. Going into reports, I expect those type of actions, and you've got to be cautious. A report can do anything, especially this big first report of the year. It's a granddaddy one. In the wheat market, when you reopen, you'll probably lose the embedded reading here as you came up. But I was bothered that you took out 426 and a quarter. So now I've got a pattern of a higher high and a lower low. You're out of that part of the trend. And I'd bet you tonight when they reopen, you lose that embedded reading, just the way the math's going to go. You had a crossover right through here, and you really haven't gone down since then. So that's fairly interesting too. I'd like to get through that report and see if the market then falls further, but resistance is going to be rather formidable between 434 and 435 and 3/4. In the sugar market, why are we down today? Well, one of the reasons is the cyclone that hit in Australia. Yeah, it's a monster, and we don't know all the damage. But the trade looked at it, and the early reports are you lose 100,000 tons of sugarcane in Australia. On the surface, that sounds bullish, right? But in 2011, they had a cyclone. We call them hurricane. They had a cyclone there, and they lost 500,000 tons. So the market's looking at that combination of not losing as much as they might have lost as being still bearish, and without hearing that India is lifting anything in the way of their taxes, they can't get more imports in, still weighing on this market. So it's still a bear market. Coffee market today had an outside day up. So you now have a pattern of higher lows, higher highs, but you're under the 18-day average. I would call that no trend. Momentum, dull, not doing much one way or the other. In the cocoa market, you have lost the embedded reading. You've got a pattern of lower highs, lower lows. This portends price in the 18-day average coming together where the market does a reset. Also, if you look at how this market did rally, not able to get up to that 100-day average. So the question is in this market, after this big break that we saw, is that the whole rally? We won't know until after the fact. In the cotton market, going into the grain report, lower highs, lower lows, right down to the lower Bollinger Band. Wasn't that long ago that you were at the upper Bollinger Band and new highs for this whole move. And you've suddenly given back about 2.25 cents of that rally, and you are oversold. In the cattle market, here's what I think could happen. I think tomorrow, if this market breaks under today's lows, especially if it gets under the lows of yesterday, the odds are that having lost the embedded reading, price and that 18-day average should make a run at each other. I don't know if they'll hit or not, but that's my guess on it. A similar pattern could develop in the feeders if you were to get under today's low in it because you lost the embedded reading. Is it just going to be one of these cases where it doesn't hit the 18-day average? It could. Won't matter. But the momentum, no matter how you look at it, is overbought market, and innately it says lower momentum could mean lower price. Hogs, while it got a bounce today, and that's good that it got the bounce, if you look at where the Bollinger Band is, 72, let's call it 72, 77 and a half, they're about together, close, but it's still, I'm going to count it as 3 days in a row under the lower Bollinger Band into a market that is oversold. So you put it all together, you come up with ideas. And let me tell you an idea for you. Modern Trader magazine. Now the May issue will shortly be out. The April issue is already out, and many of you have gotten it, but if you haven't, this is the way to get it. You call us, you go to our website, you sign up for Modern Trader. The April issue looks like this, and I'm waiting right now for the PDF of the May issue. I should get it any day. But these are the types of stories you see. And yeah, it talks about buying stocks, playing options, Forex, the cycles, what's going on in different fundamental plays in the market. It's not limited to futures at all. It really covers a gamut. And the stories are phenomenal with great graphics. They teach you ideas, be it fundamentals or not. Then to go with that, Daily Market Focus, which I read every day because it's interesting stories as they're coming through. You get it. It's a $79 value. Give us a call. Go to our website. It's all going to be free. Click right up here. Fill out the form, Modern Trader. We'll take it the rest of the way. You have a good trading day, and I'll see you tomorrow.